What's up, mortgage coach community? I am doing a mortgage strategy interview with Kraig Spence. How's it going, Kraig?
Going awesome, man. Busy, excited,
Good.
blessed.
Good. Well, this is an exciting interview for a couple of reasons. One, I have been working hard to get you into this interview, and you've been a busy boy. I think you said you closed 27 loans in July, 37 in August, and you're trending 50 loans this month. Is that right?
Perhaps, yeah, possibly. That's right.
All right. Well, that is huge production, brother. And I'm grateful for you taking time to do an interview in the mortgage coach community. A lot of your friends and your business family at Churchill has been wanting me to do this, where we walk through your live experience. So thanks for doing that. This is the first time where I've done one of these interviews on Facebook Live. So for all of you in our Facebook group that are live, I'm actually going to put a link to Kraig's consumer experience so you can follow along live and feel like what it would be to be a consumer. So stay tuned for that. So Kraig, let's kick this off with a little bit about your mortgage practice, a little bit about the online borrower experience, and then let's go through a mortgage coach live experience.
Okay, great, awesome. So I guess I'll just kind of start a general idea of my experience. This is my 19th year as a mortgage banker. I've originated over 2,500 loan transactions in that time frame. And the way my team is kind of set up, I think is important because I believe most of the people who may get a lot from this talk are like me, and they don't have a lot of originators working for them. They're the originator on their team, so to speak. So that is my position. I'm the main originator, and we average about 20 to 30 loans on a monthly basis. And my team consists of me, one loan officer assistant, and one person I call a document support specialist, and two processors. And we average, like I said, about 20 to 25 mortgage transactions on the average. Yeah.
Cool. And who does the setup of the mortgage coach total cost analysis? Is that someone on your team that's kind of doing that setup before your meeting?
Yeah, great question. So I have someone that's as trained by now, maybe even more trained. My awesome trusted partner, Joe Waits, is the guy who, if I give him some basic details, interest rate, loan amount, cash out, loan terms that I want, he'll build out the presentation for me often. Yes, I do have someone who can set them up for me. Yeah.
Got it. And so everybody watching this, a couple things to note. Kraig is one of the top producers at Churchill Mortgage. He also has probably, the best conversion, like, hey, lead, conversation, loan in the country. When it comes to converting online, most of your business is online, right? People aren't coming into your office. It's a pure online mortgage experience.
Yeah, absolutely. I've always pretty much been in kind of a consumer first business model, really my whole mortgage career. And even at Churchill, it's pretty much remained that way, although a significant amount of my business at this point in my career is referral based. That's really kind of the lifeblood, customer referrals, realtor referrals.
Got it. So guys, I've been excited for this because I interview, countless loan officers. I think it's thousands now, top producers, and Kraig is very unique. The number of total cost analysis he's done puts him in the top 1% in the mortgage coach community. And then the detail in which he does those are incredible. And here's the thing, I talk to loan officers all the time. They're saying, oh, mortgage coach, I'm too busy for that, or it's too much information. And most of the time, those loan officers are closing less than 10 loans a month, 5 loans, sometimes less than 5 loans a month, and I'm just too busy. Here's the deal, guys. Here's someone that is closing over 25 loans consistently, and he's not too busy to deliver an amazing borrower experience. That's why he's so effective. That's why he's so efficient. And Kraig, why don't we start with, I don't know if you could show it on your screen, but you're really proud of your consumer reviews, the online reviews that you get. And there was one in particular. I could show it on my screen, or you could show it on yours.
Sure, yeah, I'd be glad to share it. So let's see here. You seeing that, Dave? We live? You got my share?
I got it. I'm live. I got your share.
Killer. So
And super cool social survey integration. Not only will it show your most recent top review, they can click and drill down and go through those reviews. Let's be sure to kind of speak to that in detail, how you use this in your sales presentation. But here's a review that you like. I like it too. Why don't you talk to it?
Well, I thought that this was, I'm grateful for any review we get, especially the negative ones. This particular review I just thought was great because it kind of speaks a lot to what we'll be talking on some today. But if you read it, the purchase of our new home and closing went smoothly. Kraig and his team were very easy to work with. As one of Kraig's previous refinance clients, he was our go-to when it came to purchase our new home. The most recent purchase was another great experience overall. And the Mortgage Coach software platform that Kraig uses with his clients to analyze cost and payment breakdowns is awesome. We continue to highly recommend him and his team to all our friends, family, and Financial Peace University classes. And I just like that. I love all reviews, I really do. But that was nice, Dave, because it talks about Mortgage Coach. And this isn't the only one. I mean, you could go down quite a bit. Here's a couple: knowledge and professionalism. I like that, something I believe in. Kraig and his team are professional and courteous. Refinance information was presented clearly and easy to understand. Would use Kraig in the future and would highly recommend him. So to kind of take some of that, Dave, and if I may just kind of segue into showing people how we create this type of experience.
Yeah, no, it's perfect. And I'm actually, after this interview, I'm going to the social survey Create Wow Summit. So I'm sure I'll figure out a way to weave this into my presentation. But let's go through your experience.
Cool. So, in my kind of guiding purpose, really, as a mortgage banker, you heard me say a little bit on the last kind of interview that we did together. But I believe that one thing I've learned in my whole experience is that clarity may be the greatest gift that we can provide a customer. And you had noted on kind of my efficiency factor as well. Not only does Mortgage Coach allow us to provide that gift of clarity in really an unprecedented way to our customers, but it really allows us to be more efficient and effective with our time. And if you kind of meld those two together, people are confused by mortgage math. They are. So this really allows us to kind of explain it to people on a easy to understand basis. So much of what I'm going to go over here with you, Dave, isn't going to be like super exciting. I don't think there's not going to be a lot of sales strategy, because I don't really believe that mortgage banking is sales. I really believe it's truly educational, serving people from the heart of a teacher. And that's, again, something you're seeing resonate in all the reviews there. And then ultimately, the goal is to build value, to build a relationship and create a customer for life, right? That's the ultimate goal. So those are really the several things that using Mortgage Coach Live allows me to do. So
couple things I want to make sure folks caught. Just the way he said it, you guys know that he believes one of the most valuable gifts he can give a client is clarity. So he's built that why. So if you're watching this and you're not there, it's probably because, one, you don't know how to do it. He's going to cover that right now, how to do it. But it's also you haven't developed that why, where like, do you believe one of the greatest gifts you can give a client is clarity at the point of sale? And if it's not, then you may not go all in with Mortgage Coach and deliver it. If you want to, after watching this, just really audit, what's your mortgage why? And obviously Kraig's is to deliver value, insight, and clarity at the point of sale. So walk us through what we're looking at right now. Is this a refi scenario?
This is a refinance scenario. So I sent you an email, Dave, if you wanted to pull it up or share it. The email that I would typically send to someone when they inquire with us, or if I was connecting with a customer whose mortgage I was actually managing, right? Do you want to pull up that email, or you just want me to dive in?
Yeah, I'll pull up the email in just 1 second. I do want to let everybody know that I put a link to this. So if you want to follow along like a consumer, so actually, be a consumer as Kraig goes through that, because he is going to build it out. Get ready to do that. I'm going to show my screen real quick. What you're seeing there is an example of the email that Kraig sends beforehand. Anything you want to call out in that?
In the email, the call out is short, simple, sweet, right? Once again, this is all about educating people, and the link is right there at the front of the email. It's only 3 or 4 sentences. I don't have it in front of me, Dave. I closed my Outlook. And then the next thing is, here's where we go from here. Here's the call to action. If you want to move forward, the next step is us completing that consultation on the phone, which is 20 to 25 minutes together. And the other very important thing to bring up, and for some people, this may be a complete twist of your professional approach, but you see, I do these analyses usually before the application day for a lot of people, because a lot of people aren't ready to have you pull their credit. It's invasive, it's uncomfortable, and frankly, a lot of people take that the wrong way. They take it very salesy. You want to pull my credit, and I'm always consistent with, we're here to serve. So I really like to show people right up front the numbers, and we can gather that by asking some questions about their credit, their home value, their equity, their purpose, their objectives. But I make it very clear in the email, these are not final numbers. The last thing I want somebody to do is to take my cost analysis before we've even done an application and start shopping it around or calling other banks or going online. So I make it very clear, these are not final numbers. Numbers could be better, numbers could be worse. This is all in the heart of education. Okay, so that's a very important message I deliver in that email as well. And then at the bottom of the email, I will give a link where they can read some reviews if they want to my Zillow page.
Okay, guys, so I'm going to put that link down below. If you're watching this on Facebook Live, there'll be a link down below. If you're watching this in LinkedIn, take a screenshot of if you're watching this in YouTube, take a screenshot. So I got this email. I clicked on the link. I'm on the phone call with you, and now it starts. So why don't you give us the 1 minute opening, we just got on the phone, get us all centered around what we're looking at, and then walk us through your online borrower experience.
Okay, yeah. So my guiding purpose is your mortgage advisor. Now, by the way, I'm usually doing this on the phone, right? I'm usually not doing a Zoom live with people because I want them looking at the screen. That's one thing to know. And so we're on the phone. I'll make sure that when I set up this appointment, by the way, it's usually not a first call. I'll usually take the first call. I'll gather information about their mortgage. I'll send it to my assistant. He'll build out the report, or I will myself. And I'll set up a time where husband and wife and husband can be together in front of a computer. If they have kids, put on Barney, get him out of the room, send him to mom's house. It's that important. This could be the biggest financial call of your life. That is how I set it up, okay? So
why, by the way, time out, everybody. Did you hear that? This could be the biggest financial call of your life. I mean, he's not just selling loans. This is the biggest financial call of your life. Let's go. I love that.
Yeah, absolutely. So by the time they're sitting there and they get the email, mind you, I don't do this from I don't send the email, Dave, with the information on the new mortgage, right? I only send the email, and I may send that email that you got shortly after we talk, but the email only has this. It only has your current mortgage. I am not building it out yet with the loan solutions yet, understand? And that's so important because you can't just leave someone to their own devices, right? I think if we're professionals, delivering the information in a way that people can absorb it, digest it, is really important. And that's not to sell people, that's to educate people. It's to save people from themselves. People will admit the number one issues with mortgages, they don't understand the numbers. And as an industry, we still haven't given people a really tangible alternative to consider aside from rate and price. So just remember, when you're going into this talk, you have to deliver that, right? And so if you send it to somebody with all the different loan solutions and don't set it up, you're setting yourself up for a pretty big trap and a pretty ineffective call, in my experience. So this is what you're pulling up, Dave, when we start. And the first thing I'll ask, hey, you have the report up. It's important to ask, is it going down the middle of your screen, the total cost analysis? You'll see a blue banner. Is that going down the middle of your screen, or is it kind of split with the left and the right, where on the right side you can see graphs? You have to ask that first, Dave, because everybody's screen is different. I don't know if you know the reason it comes on different ways for people. I think it has to do with screen size and resolution.
Yep, you got that right. And nice job. You're making sure that they're viewing it the way he wants them to view it, not the way they want to view it, at least at this point. This is like, he is the teacher, he's in a class, the family is getting ready to go through the experience. Love it.
Mm-hmm. And so often, I'm not completely consistent how I do this every single time, Dave. Last time we met, I told you that I like to switch the view, right? For a lot of people, I like to switch the view. I'm not going to get too advanced here. A lot of that has to do with where the customer's at, how many mortgages they've done, how slow I really need to take it. If I'm speaking with someone I really want to take my time more so, I'm going to do a single screen. I'm not going to split it. All right. So most of the time, I'm actually been doing this as of late for a couple reasons. So I'll say, okay, we got it right in the middle. So tell me if you see me highlighting the current column, and I'll do that. I'll highlight the whole column. Just a test. I want to make sure we're live. They say, yep, Kraig, I see it. We're live. So then I'll remind them. So this is a communicative medium. It's called Mortgage Coach. We don't own it at Churchill, but I've subscribed to this for many, many years. And I believe that it's the best way to clearly communicate loan recommendations to my customers. And that's why I'm choosing it to speak with you today. Okay. So let me go ahead and unhighlight that. Now tell me, do you just see purchase price? Yes. Okay, and here's where I just start going line by line, and I'm going to do it quicker today than I typically would, Dave. There will be a little bit more pausing and asking for questions. Your current loan amount, you owe about $300,918. Your rate's 4.5%. Stop me if any of this looks wrong to you guys. Your loan term, 30 years. Your payment, $1,925.51. Your freedom point, now understand, what we call the freedom point is the month in the year that you would achieve debt-free homeownership, right? If a customer of mine, of course, had talked about that being really important, I'll pause there and I'll talk more about it, okay? And how we will serve people after the closing to continue to help them towards debt freedom, and how we'll use that as kind of a leading indicator of how well we're achieving our goals. If they didn't talk that much about it, I'll still mention it. And if you scroll all the way down to the screen, now this is where you need the customer to do this. Just remember, in a live interaction, you're not seeing the screen scroll down. Jacob, if you can do that, you'd be awesome. But for right now, if you can't scroll it down, tell people, hey, scroll all the way down. And Dave, what I'll tell people, scroll all the way to the bottom till you can't scroll anymore. And here's what comes up, okay? We're doing screen share, right? You're seeing my screen? Is that what we're doing, Dave?
I see it. Yep, I see you right now.
Okay. And then once they get to the bottom, I'll say, what do you see? Say, I see your reviews. I say, we'll just go right above that, right? That's the interest you're going to pay in the remaining 28 years and 8 months that you have remaining on your mortgage. What number do you see? I always want to involve people a little bit there. Number one. Number two, I want to make sure that they didn't run away and make sure the kid didn't fall off the table, right?
Hey, real quick, by the way, Kraig, if you click on that and you're in live, click on that bar chart. Yep. Yeah, and it will move their screen to that spot, just FYI. So it'll highlight, and their screen will go and see what you're seeing, FYI. So you don't actually, unless you want them to actually see your reviews at the bottom, we don't have a highlighter on reviews. But like right now, I'm being the consumer, and everybody watching this on Facebook Live, if you click on this right now, it's moving my screen, and I can actually, cool. I'll show you what I see so that you can see my screen. Boom, just take 1 second. Like, it moved right to there. So that's what I see as a consumer right now. I was at the top, you clicked it, and boom, that's what I see.
Awesome.
Anyways, keep it going, brother.
Excellent. That's great. I learned something. Thank you, Dave.
That's my goal. I want you to always learn something when you talk to me.
Amen. You do a good job of it. So I could click that, and it could take, or you could click that, and you could take someone right there to the bottom. And I'll have to roll that around my head. I may do that. So, and as you say that, another thing I'll tell people up front is I'll make it clear, because sometimes when people are listening, they get nervous thinking, I have to take notes. And I don't want people taking too many notes in this talk. So another thing I forgot to say at the beginning, I'll typically tell people, listen, I'm going to leave you with this report. This is not just something we're going to go over for 10 minutes together now and never again. You have to make a decision today. This is your report. I'm really here teaching about the numbers, here to answer questions, and making sure you know how to navigate this report as well, right? So I do make sure they know how to navigate. So we go there, 234, 633. After they say that number, I say, okay, just go back to the top or the summary section. I guess here, Dave, can I click? Did it take you back here?
Yeah.
Awesome.
Like if you click that, it moves me back up.
So we're back there. Now your whole current loan is highlighted. Now, when you go into these live meetings, there are different screens. I'm still using Legacy. I've used this forever, Mortgage Coach. So I'm getting used still to the new. So you want to have the presentation options up. I'll click the 25-year fixed option. And again, at least in Legacy, you have to click that, click over, and then I'll go ahead and I'll click back to be prepared to maybe add a 20-year, okay? And I'll make sure that the customer sees it. Do you see the second column? Did it just come up? Yep.
Yeah, wow, boom, that's incredible. By the way, when you do this and you start moving it and then you show the new column, do you get any oohs and ahs or any client feedback?
Yeah, I get, there's definitely, hey, that was really cool. But for me, just what resonates is it's like, oh, you're here. You're with me. That's what I get. And I think that's what customers get. And right. I think that's so important. Yeah.
Love it.
Yeah. And so your current property value, we're estimating around $388,000. The loan amount, okay. The reason the loan amount is higher than your current loan amount is because we are financing the money to pay your closing cost for you and also to establish your new escrow account for you. I'm going to go over that on a separate screen in just a minute. So just kind of put that in the shelf for a second. We're going to come back to that. But what's important to note is we are financing the cost. So those are already accounted for in the savings and the payment that you're about to see on this report, okay? 3.625% is the new interest rate without paying any points. Because you're not paying any points, your APR is going to be really close to your interest rate. Do you guys know what APR stands for? I always like to ask that to people, again, just to kind of feel out where they're at, okay?
Yeah, you're an educator.
I'm an educator. But as we say this, Dave, I would bet you more than half of the originators listening to this don't ask that. You assume people know what an APR is. They don't. They have no idea what an APR is, okay? Help them understand. So anyways, APR is your cost of credit expressed as an annual term. If there were no cost whatsoever attached to a mortgage transaction, your APR would actually match your interest rate. Of course, that's never usually the case. So your APR is always going to be at least a little bit higher than your interest rate itself, okay? Your term, this is just a term I'm picking out for you guys because it really excited me. You could take down, if you look at your freedom point, you could take off 3 years and 8 months off your current mortgage and your payment actually goes down $9. I also don't know how many people are originating 25-year mortgages, Dave. It may not be part of their practice. For me, I do a lot of 25-year financing because it's very consistent with our message at Churchill. If people can't do a 20-year or 15-year. So it's also really great because if you're doing a 30-year, I know we have a lot of the mortgage coach community, and I do this sometimes depending on the customer who likes to show a 30-year and say you're saving $150 and then show the wealth impact or the principal reduction savings where you can reinvest that money back into the loan, right, Dave?
Right.
That can confuse one of these conversations. So if you just show a 25-year, you say, yeah, you can keep your payment about the same where it is today. And this is really an apples to apples comparison. By the way, we could do the same rate as a 30-year if you really wanted to, okay? Your cash to close, the $532, this is the only money you'd have to have out of pocket through the transaction for the credit report and also for the appraisal. And yes, Dave, I do go over total interest percentage. I don't take a long time on it, but I'll tell people, look, your first total interest percentage, if you take the total interest you'd pay over the life of the loan and you divided it by the loan amount, that's the percentage of interest that you'll pay on the loan. And we'll go over how much that's going down. And then your first loan 5-year cost is the amount of interest you'll pay in 5 years. The amount of, Dave, I'm not going to go into that right now, but I give people the quick definition of what that is in as easy to understand format as I can. And then your savings over 60 months. This is important. In fact, I want to illustrate it for you in numbers. Check this out. Over a 5-year period, just really understand what this means. Over a 5-year period, not only would you pay back or recoup or break even on the cost involved in refinancing, but you would come out ahead about $10,000 over where you're currently at. Does that make sense? Do you see that?
Yeah, I like that.
Now, remember, one of my key questions I'm asking people in a purchase or a refinance, Dave, is how long are you going to be in the home, right? Very equivalent to a doctor asking somebody about their lifestyle, right? Before they prescribe any medicine, right? So we have to know how long somebody's going to be in their home. So of course, if they were saying 2 or 3 years, I could be looking at a different loan strategy. This particular customer who I copied this file over was definitely in there for at least 5 years. That's why I use that as the short term. If they said at least 10 years, Dave, I'm probably going to 120 months. I'm making that relevant to the customer. So that's important.
So Footnote, teaching Footnote, every time as a mortgage coach, you deliver a refi presentation to a family, it should include monthly payment savings or difference and the cost over a time that's relevant to the family. Because loan officers aren't equipped to do that. They don't know how to do that. They don't have the technology to do that. As a mortgage coach, that's just like always, like in this case, as Kraig said, based off of the conversation, 5 years was the horizon. So cost or savings over 5 years. If 10 years, it would have been 10 years. So just guys, that is a mandated must do every time you talk to a family as a mortgage coach, if you want to optimize the value in the service experience. And of course, if you want to optimize your lead to conversion ratio, you always connect that savings over time, whether it's a refi or purchase. So I just wanted to put a footnote under that and an explanation mark, Kraig. So keep it going, bud.
Yeah, and I also just want to clarify what clarity means when I spoke about clarity earlier, Dave, and what that really means in the context of mortgage education is you want to remove people from making an emotional decision. A mortgage is the most emotional financial decision people are ever going to make, rightfully so, because it's attached to your home, your family, your children. And so part of our role here really, when we talk about educating and bringing clarity, is honestly removing the emotions from the decision. And this is really where this starts to, happen, right? Sometimes it'll even get to a point where I'll ask people about the savings, or we'll look at short-term savings, and I really hammer it home. I say, look, this is, I want to make sure you understand, it's not about how we feel about it. It's not about my opinion. It's not about your opinion. I want to make sure you understand the math here. You are making your money back, and you're coming out ahead over almost $10,000 in a 5-year period. So I usually notice in speaking with my customers, this is where it really starts to settle in. And then you go to the bottom. And of course, this is very dramatic, okay? This customer happened to be looking at a potentially a 30-year home. I've heard some originators ask people, how long do you think you're going to be in the home? And just be very careful with that, because if you believe in building wealth through debt-free homeownership or owning homes in general, then they may not be selling their home. They may be moving or moving up, but they may keep this home for 30 years. So that's something to be very cautious of, because I've heard some of the community say, I won't show 30 years because it's too dramatic. Well, I own a lot of homes, right? And a lot of my customers have that as an objective. So I'll get that from them. Not how long are you going to be there? How long do you think you're going to own the home? Are you going to build wealth through this home? Right?
Good, really, really good nuance. And Kraig, just a reminder, click on that. Like if you click on that, everybody's will move to it. So, because we have people that have clicked on this link and they're following along. So just remember that. Good point, guys. Change your vocabulary. Words matter. It's how long do you plan to own this home? And then I also think it's just a good footnote, because it's a good opportunity for you to re-emphasize. I'm not just a loan officer. I am helping you build wealth with real estate by making smarter, more effective mortgage decisions. So it's an opportunity to practice what you preach. So I love that, Kraig.
And there's more info tabs. As you're looking at the screen, you guys should be seeing more info tabs, little blue tabs right in the upper corner of each one of these graphs that I'm clicking on. I'm going to be going right back up to the top summary, and there's a more info tab up there that I'm going to click on, and you should see your screen now come up with a payment breakdown. Do you see that? Yeah,
it popped up. I see it.
Okay, great. So as you'll notice at the top, there's 3 tabs: payment breakdown, closing cost, and reinvestment strategy. On your payment breakdown, you have your principal and interest. That's the part that never changes about your mortgage. You have your property tax and your hazard insurance, or your homeowner's insurance. I always throw that in there because a lot of people say, what's hazard insurance? I say, hey, that's homeowner's insurance. So, monthly payment. Any questions on this screen? Just, again, I'm always asking people, Dave, any questions on this screen? Nope. Okay. Closing cost. Closing cost. Now, if you see where I highlighted, right under that highlighted column, there's a little fee detail button. And I'm going to click on that for you. Now, before I click on that, Dave, a learning point, something I've learned over my career, and I didn't learn this in the first half of my career. I'd say the first 8, 9 years of my career, I used to give people closing cost. I mean, I used to even bucket in escrows to telling people, here's your total cost of the transaction. And then I got to separating out, cost and escrows. And it wasn't until some number of years ago that I realized true education is walking people through each and every single cost personally and making sure they understand what each thing is so that people don't feel like there's just so-called junk fees, because really there aren't many junk fees. There's no junk fees these days in a mortgage, right, Dave? With the margin mortgage companies make, there are none. People need to understand what each thing is. So I'll take them to the fee detail. Processing fee, underwriting fee. Those are the only 2 fees that Churchill charges, and they are for exactly what they say they're for. Credit report. Initial escrow deposit, I'll come back to that. Third-party title company and state fees. What I basically have done here is I've put together in one bucket, Dave, money for a title exam. Someone needs to search the title of your home, make sure there aren't any liens on your home. Somebody has to come out to your home to do the loan closing, and they have to reissue title insurance on your home as well. And then there's a cost for the title company to go re-record your deed in the mortgage at the courthouse. So a summary of all that's about $11.75. And then you'll have your appraisal fee. Now, if you look on the right side of the screen, you'll see where it says financed. It says yes to everything except the appraisal fee and the credit report. So if you add those 2 together, again, that's $530 you pay through the process. You're going to pay the credit report when we do a loan application together on the phone. And the appraisal, if one is required, which we won't know until you do an application, appraisal will be paid in about a week from now, okay? Any questions on any of those items so far? If no, I'll go over the escrow. Your escrow, you'll notice how this says prepaid escrows. Yes, right? So $2,326 is the estimate of money we're setting aside for your escrow account. And this will be the point where I'll explain to people, Dave, how the escrow money moves, how you're going to get a refund from your current lender, usually within about 30 to 40 days of us paying them off. They're going to send back money for your from your escrow account back to you. And as a side note, Dave, this is where I'll also ask people, how much money do you have in the bank account? If they say they have 10 grand, 15 grand, I'll probably tell people you may want to fund that out of pocket because it's not a closing cost, really, okay? It's a prepaid escrow item, and you're going to get a refund of whatever's in your existing account today, so you may not want to borrow more money than you actually need. And I only say that, Dave, because I feel like it's good advice to people who have money, okay? And if you look in the bottom left-hand corner of the screen, you'll see borrower paid $5,288. So if you break it2,300 there's about $2,300 of money to build your escrows, and then there's about $2,900 of actual closing cost. Okay. Any questions on this screen?
No, I'm good.
Okay.
And
side note,
folks,
I would love
if you're watching this, guys, and you have questions for Kraig, post them down below. I am watching our Facebook group for any questions that do come in.
Cool. So there you go. So that's pretty much what I'll go over. And the prepaid interest, I did kind of skip that here, but of course I'll go over with people. You know, you pay interest every day from the day you fund on the loan to the last day of the month. But yeah, I really take my time in this screen, Dave, because this is the big mystery for people, right? What cost am I paying? And what do you hear all the time as originators? I don't want any hidden costs, right? So don't wait for somebody to say that or feel that. Like, show it, bring it all down, remove the fear from the process. The number one reason I think a lot of people don't refinance it's fear, right? It's fear of the unknown. So just make it really all known. This may even be the most important screen, Dave, on the whole Edge Live presentation, Mortgage Coach Live.
So I want to add something to that. So, I mean, that is where you're providing a next level transactional education experience. So we talk about being an advisor. It's not about price. Well, it is about price. And this is where you deliver clarity around the price and the cost. And then again, where this really becomes magic, and it's the art and science of selling with Mortgage Coach and advising with Mortgage Coach, is where you're like, okay, you're giving this good transactional educational experience, and then you're doing next level strategies like pay your home off faster, look at your freedom point, Kraig, how often do you mentioned the reinvestment strategy, but how often do you actually, show a reinvestment strategy?
Yeah, quite a bit. But first of all, at this, I'm gonna answer that in a second, Dave, because
Okay, keep going then.
I'm gonna come right back to that. Because for this particular customer, again, they had certain goals. They did not end up doing a 25-year. I start there because it's the easiest to digest. Our payment's not going up, payment's not going down, our payment's staying the same. And we're saving how much money at the bottom? You're literally between the two. You make the same payments you're making today, and you're saving $74,000 in interest potentially over the life of your loan. So let me ask you a question. How comfortable is it for you making the payments right now? I mean, do you need the payment to go down, or actually are you paying a little extra? These particular people, they were rounding up their payment every month, Dave. So they were already rounding that payment up to like $2,000. They're like, it's easy, it's no problem. So this is where I'll come back and I'll show the other options. And if I'm adding a couple other options, this is where maybe, to keep it moving, I'll show them both at the same time, okay? So look, if you're looking at your screen, tell me if you see a 20-year option now in front of you and a 15-year option.
We do.
So if you're looking at it, the loan amount is effectively the same because the costs are basically the same. You notice the interest rate, it's not a huge difference between the 25-year, but it's a little lower on the 20. Really, the 15 years where you can get down even 0.5% more than the 25-year. And check this out. Your payment only goes up about $570 from your current mortgage, right? On a 20-year, your payment only goes up about $212 from your current mortgage. Your freedom point goes down significantly, all right? And again, Dave, this is where I'll have to slightly touch on it for people that if you look at your first loan 5-year cost, you'll notice it's actually going up. And the reason is that includes principal paid down. So it's not all a bad thing. This is also accounting for principal being paid down on a mortgage, okay? You want to see a higher first loan 5-year cost in most cases because you're paying down more principal. And let's just go to what this really means over the short term. Over a 5-year period, your savings on the 15-year, you come out significantly ahead. And then if you look down in your interest over a 30-year period, look at that.
Yeah, we're talking about $150,000 in pure savings, which is, a life-changing amount of money.
Yeah, and if you believe in the heart of a teacher, right, the reason teachers ask students questions is what, Dave? It's to make sure
they understand.
They understand. They're listening, and it's asking them to be critical, right? And so when I get to here, I ask people, how much money is that? I mean, involve your customer, right? If you make this a monologue, and even then I'll tell sometimes people up front, sometimes I'll say, hey, don't do yourself a disservice thinking this is a sales presentation because this won't work. I'm not here. This is not to be a monologue. I really want you to be engaged. I really want you to be critical of what I'm about to show you, right? Sometimes I'll lead with that too.
So Kraig, I want to just share my screen real quick.
Mm-hmm.
I saw a couple of questions come in. I just want to, make sure everybody is in the know. We're talking about Mortgage Coach Live, so if you are in a specific loan or strategy, you can add a video and you can go into a live experience. So if I clicked on that, it would be live. And then I also want to make sure everybody knows what he's doing here is he's pre-building the TCA with multiple options. But when he starts it, he's only got one of the options showing. So like right now, I unclicked it. If you were to view this specific total cost analysis, you'd only see one program. And then he's going through it using the live feature, click, click, confirm. And then he's going back, adding a program, which I want to remind everybody, you could do this from your desktop. You could have your iPhone. So you could be doing the whole live experience on your desktop, and then on your mobile phone or your iPad, you could add these. So you could be delivering a mobile or an experience to a family, but using 2 different devices yourself. I do that personally a lot. For instance, I'm doing this interview right now. I'm showing this to you on my desktop, but I have my iPhone. Like the video that you're looking at is my iPhone video. And anytime I do a video, I use my iPhone because there's no better camera and audio connection than my iPhone. So I've got a little tripod up here, and that's how I'm doing it. So I just wanted to make sure I connected the dots on that for you guys. So Kraig, we got about 5 more minutes. I do want to make sure you answer and speak to the reinvestment strategy, how often you show that, how you show that.
So if we're doing a reinvestment strategy here, okay, I would simply go back. Is my screen back on, Dave?
Yeah, I see your screen.
You're seeing my screen? Okay. So you go to the analysis section. And again, remember everybody, I'm using the legacy version because I'm an old man when it comes to Mortgage Coach. Okay. So if I go here, this is where you would do it, right? Adjust reinvestment strategy if you were to do that. And here's where it may come into play. I'll give you a perfect scenario. Someone may look at the 20 and 15 year, and I'll ask them, which of these options are you most attracted to right now? Which feels like the most doable, comfortable, realistic for your family? Again, engagement, hearing people, and something that I'll often hear, Dave, and I'll tell people if I hear any pause on like doing the 15-year, I'll say, look, I don't want you to do a 15-year if you feel this breaks your budget at all. And again, remember, guys, I don't know enough about you. I'm going to learn more through the consultation when I get you pre-approved, and I'll be able to make a great recommendation. So I don't want to overthink what this is about right now. This is mainly just seeing, do you see any options that excite you at all to maybe at least take the next step? So if you're doing this up front, that's really what it's about. But I also ask people, hey, if they say, I can't do a 15, can't do a 20, but we want to pay it off quicker. Well, how fast do you want to pay it off? 15 years, but we don't want to be trapped in that payment. I'm proud to say I know how to use a mortgage calculator, Dave, but I know a lot of the community doesn't because I work with a lot of mortgage bankers. So what's cool about here is if you just play with the numbers, if you knew that a 15-year was what? It was about $569 more. You see, as you put that in, it goes to 15.83 years. You know, you can play with it and you can pretty quickly come up to an estimate of what it would be to have the home paid off in 15 years, right? And so there you go, 660, I click OK. I go back to this page and I say, well, here, just look at your screen. And if you want to talk about, I mean, the wow factor, but again, just great service, the equivalent of asking for an extra side of butter or drink at a restaurant, having somebody else say, okay, that's what you want, and literally going like, and somebody has it in their hand and gives it to you, right? That's what Mortgage Coach does. So somebody may ask that, and you can build that out in 2 seconds and show them what that 25-year reinvestment strategy would look like to achieve their individual goal of paying their home off in that period of time. So did you guys see your screen just change?
Yeah, no, just boom, you know, it totally changed. That was powerful, clarifying. And then I am going to share my screen one more time because I know this question is going to come up for folks. Again, your screen will come right back. So guys, I want you, if you're using Mortgage Coach Advice Engine, this is it right here. You would be in the Advice Engine, make sure this is up, go to the analysis screen, and once you're in the analysis screen, go to the bottom. So like if you're seeing this, you're at the top, go to the bottom, it says adjust reinvestment strategy. And this is where you can either add a debt reduction, you know, the Dave Ramsey strategy, or if it's someone that, oh, I want to reinvest the difference with a financial planner, you could put that. So I just want to make sure you guys know how to do both of those. I know Kraig always does the reinvestment, and I really recommend to every loan officer out there, every time you do a refi and a purchase, you should always show a reinvestment strategy, because most clients, they don't know. They don't realize that, wow, that reinvestment can be life-changing. And so you've taught them something that they don't already know. And here's the other deal, guys. It's something that's very easy for you to do as a mortgage coach. It is not something easy for a non-mortgage coach to do. So just in the spirit of you're competing for trust, you're competing for value, if you always show, hey, here's your monthly savings or monthly difference, look at that over time, and then look at that with a reinvestment, you are always outperforming your competition. No other loan officer is always showing cost over time, reinvestment strategy. That puts you in a league of your own. So do it because it gives you a competitive advantage. Kraig, did you get done rebuilding your desk there? I heard like little hammer action.
No, but I just pulled off a miracle. Maybe. We'll see if I did.
Were you getting ready to run out of juice and you had to like set it up?
Dave, that's why I don't do Edge Live with Zoom. There you go.
Okay. Yeah, we sucked up some batteries. So Kraig, let's wrap this up within 5 minutes. This was a refi strategy. You'd be doing the same thing with the purchase strategy, right? Like, I mean,
Yeah.
it's the same. It's the same. You know.
I mean, you could talk about this
conversation.
stuff forever, right, Dave? But I'll just show you kind of a little nugget. Do you have the other link I sent you on the purchase?
Yeah, I do.
I mean, and by the way, on the refinance, you could do a separate call on it one day, but I'll do a lot of, kind of financial planning with people. If people have $30,000 of debt, I may tell them the craziest thing you could do right now is a 15-year mortgage. But if there's a 30-year mortgage or a 25-year, it can save you a couple $100. What you should do is maybe think about a plan over 3 years. When is your plan of being debt-free? And I want people to tell me, if they say 3 years, I'll show them what could you do with that extra $200 by reallocating that towards your debt, or as we talk about in financial peace, snowballing your debt from the bottom up. And then with Mortgage Coach, you know what I'm going to say, you can actually go to the reduction payment screen that I was at, double click on it, and you can show the reinvestment of the savings. Once they have all the other debt paid off, once they're able to put, maybe in 3 years, all that debt's gone, you can put $1,000 back on your mortgage, and I'll show them from month 36 on. And Dave, that's where I'll start looking at the reinvestment tab. That's where that becomes ultra useful, because you can illustrate that and really make it very clear to understand. It's actually one of the coolest tools in Mortgage Coach. A side note.
Whoa. Ultra, by the way, I got a new word from you, ultra useful. So did you guys catch that? The reinvestment strategy, one of the most powerful tools in Mortgage Coach, ultra useful. So make sure you guys get after that. I did put a link to Kraig's scenario there. I did want to do a little shout out for your fellow Churchill family member, Amanda Gilbert. She released a pretty cool video into the wild of the Mortgage Coach community today. Or no, not today, 2 days ago. So check that out. If you are watching this live in Facebook or you're watching it as a recording, guys, we're wrapping it up, but you can post questions. Kraig and I will make sure we get those I'll make sure we get those answered. So Kraig, let's stop sharing the screen. Let's take it down real quick. So hopefully, guys, you just got some value. You saw a guy that's closing over 25 loans a month consistently, that's spending 30 minutes to an hour for every family that he serves. He's slowing it down. He's being super intentional about giving that family value. He's present. He's asking questions. He's not trying to speed them through it. And he's doing 25 loans a month with one assistant. So I hope a takeaway for everybody on this call is slow it down, connect with people, make, total clarity a value prop. Kraig, if you were giving any advice to your young self or to a new loan officer getting in the business, or someone who's just struggling, they're not killing it.
Yeah.
What's your closing thought? What's your closing advice for everybody?
Oh yeah, easy. Work hard and work smart. And two examples of that. Working hard really is what it is. And we can talk loan strategy all day, but this is a business for people who love what they do. So when you're working hard, it really doesn't feel like you're working. I think real successful mortgage professionals know exactly what I mean when I say that. But the working smart part is a little bit different. Working smart, you hear me talk about trying to be effective and efficient with my time. You can't you can almost never get a husband and a wife together between 9 and 5. It just doesn't happen. We all have lives to live, and we have to keep work-family balance. It's important. But at the same time, we're blessed to be in a profession where you can take a Thursday off. You can take half of a Friday off, just work morning to 12, and come in and work Saturday, work Sunday. Why? Because we are in the retail business, and for some reason, people sometimes forget that in the mortgage community. So if you ask anybody who knows me well or people at Churchill, they know that the weekend is when I work the most, and the evenings is when I work the most. And I usually like to go out when people aren't out. I can get places easy. So we're really blessed for that. But work smart, because honestly, if you're new into this business, and even if you're not new, you can get more done in 4 hours on a Saturday than you can in two 9 to 5 days during the week. And that's very real. So that would be something that I would really focus on doing. Work a little harder, but work a lot smarter.
I like that. And that mimics some of what I got from my interview with Sean Herrera, who is going on his 3rd year as a mortgage professional. I'll be posting this interview tomorrow, but he's killing it, right now. He's only been doing this 3 years. He just hit his first month where he did over 10 million, he did like 12. Now he's in Northern California, high loan amounts, but he hit a big milestone, and you'll hear him. He's been waking up early. He's putting total cost analysis together for his past customers, and he's not connected to the results. He's like, 30% of them, it doesn't make sense. And I give it to him, and I'm like, hey, I checked your mortgage, doesn't make sense. Gives the feedback to the realtor that referred him so that they can see that he's on it. And 70% of the time, because rates are low, it does make sense. And he's waking up early, and he's catching new loans, and he broke a personal record. Check out the interview down below. Guys, I hope you liked this call on Facebook Live. If you like the fact that I did this interview both on Facebook Live, and it will be in the YouTube channel by tomorrow, let me know if this is something I should do more often. It was easy for me. If you got value from this, give us a like, share it with your mortgage friends. And also let me know, are you guys using live? Are you doing these live experiences? Do we need to do more training for you? Is there anything we could do to make using Mortgage Coach live online easier and more valuable for you? Let us know down below. Kraig Spence, you the man, bro. Appreciate you.
You're the man. Thank you,
All right,
Dave.
take care, everybody. This call is a wrap.